You probably hear a lot of traders talk about develop your own trading strategy, but no one talks about how do you get to that point where you can develop your own strategy? What do you need? So in this video, we're going to focus on a few tips that can help you find your trading strategy. Let's get into it. Coming up with a trading strategy can be super difficult, or it can be very, very easy. It really depends on how much basic information, basic foundation do you have of being able to read a chart, right? That's the first step. Before you can even think about coming up with a trading strategy, first you need to ask yourself, are you able to read a basic chart, a 5-minute chart, a 15-minute chart? Can you tell a difference between what happens on a 5-minute time frame versus on the daily time frame, which majority of the traders can't? Right now, when you're trying to develop a trading strategy, you need to be able to come up with, all right, here's where I'm getting into a trade. Why am I getting into this trade? What am I looking at before I get into a trade? What is my criteria to get into that trade? All of those questions are going to be answered based on how well or how knowledgeable are you when it comes to the technical analysis, reading a chart, and so on. So before you guys can even worry about a trading strategy, right, let's start fresh. First thing is focus on trying to build a foundation. Look at price action. Try to learn as much as you possibly can. What happens when there's a 40% or a 50% pullback on a single candle? Again, depending on the time frame. It might be different on 1 minute versus 15 minute. On a 1 minute, you might have a short-term reversal, while on a 15 minute, it might be setting up for a longer reversal. Then the correlation between the candle and the volume. And then thirdly is how well are you able to identify key levels? Right? When you're looking for key levels, what time frames are you using? Do you have 3,000 lines on your chart, or do you actually have the levels needed to come up with a trading plan or a trading strategy? So now you see all of these things are connected with one another. If you understand volume needs to be a certain amount on a certain time frame, and you're looking for a reversal, let's say on a 5-minute time frame, as the volume starts to slow down and you see that the body of the candles are starting to slow down in the formation, right, that gives you an idea, all right, this is where I could potentially start looking for a reversal, right? That's how a strategy starts to develop based on how you look at a chart. Now, if you can't read a chart, if you don't know what you're looking for in price action or volume, developing a trading strategy is going to be a very tough task. And in this case, you're going to end up either following someone on Instagram or YouTube, looking at, hey, I got in here because of this reason, I got out here, right? And at that point, that's not really a strategy that might work in your favor. So you have to look at developing a strategy kind of like how when you sit into a brand new car, you make small adjustments such as where the steering wheel needs to be, how high or low your seat needs to be, the mirrors, right? And these are going to change based on the next person. So, but if you don't understand the basic fundamentals of a car, how the car drives and so on, you're not going to be able to understand how to make those changes and how they're going to help you drive the car. So just like that, understanding the chart, that's going to be the first step. Everything that's on a chart. And I'm not talking about 30 indicators. I'm talking about price action, volume, key levels. That's it. If you can understand these 3 things, then developing a trading strategy is going to be very, very easy. So once you understand the basic foundation, basic understanding of how to read a chart, second thing is every single trader out there has a little bit of an edge over other people. And this edge is going to come from how quickly you're able to read maybe certain patterns, how quickly you're able to analyze multi-time frame, how fast you can read the tape, how fast you can break down the tape, how quickly you can execute, how great you are on executing on the stop losses, right? All these small things are something called having an edge. So an edge that you might have might be different from another trader. For example, I'm able to read the tape, I believe, better than majority of the other traders out there. So that's my trading edge. I'm able to execute very fast. That's another edge. Now, in combination with being able to read price action, volume, key levels, now you implement your edge into that. Now that is your step 2 or phase 2 into developing your trading strategy. After that, the next step that you guys want to take is coming up with a checklist, right? So take a piece of paper, go over the last 30 trades that you've taken. So if you have a trading journal, right? That should be very simple. Just go over those trades, jot down every single thing that made you get into a trade. If the answer to, let's say out of 30 trades, the answer to 25 of those trades is green candle meant calls and red candles meant puts, you don't have a trading strategy. That's plain and simple, right? You're pretty much either following someone's signals or you have zero idea what you're doing and you're simply going based on the color. Green represents calls, red represents puts. That's not trading. So let's just say there are some criteria that you do actually follow, but you've never really paid attention to it. Then you want to jot them down. Let's say volume has to be over a certain level on the 5-minute time frame. On the 15-minute, we need to be above or below a certain key level. On the hourly, we need to be breaking out of either the previous day range, right? These are now small things that you need to answer in order to develop your trading strategy. And back in 2014, 2015, when I first started trading, this was a backtesting method as well, which forces you to answer certain questions that ask you like, hey, why are you getting into the trade? What is your criteria to open a trade? I mean, currently right now, not a lot of people talk about backtesting. Majority of the traders that I do talk to about backtesting, they talk mainly about going on demand, going back in time and trading. You're not going to take 100 trades. Traders are very impatient. So sitting there trying to replicate trades in, a demo account and doing this for 100 trades is just not realistic because a lot of people are not patient. So when you create that checklist, when you jot down every single thing that you look at a chart, why you're getting in, it could be a reversal, it could be an opening drive, it could be an opening range breakout, right? Writing down every single detail as to what makes you get into a trade, that's your third phase as to how you're going to develop your trading strategy. I'll give you guys an example. Now, opening range breakouts, these are set by textbook 5-minute high, 5-minute low of the opening levels, and you create a high and low of that 5-minute time frame, and you look for a breakout on either side with volume spiking. Obviously, as the volume spikes and continues for a follow through, that gives you a high probability of that trade finding momentum in that direction. Now, remember, this is the textbook explanation. Now, tweaking this and making this work in the current market, also known as adapting to the change, which again, something I'm going to make a complete separate video on this. A lot of traders don't really talk about is you want to change small things into your trading strategy. You don't want to change the whole trading strategy, but based on the market condition, you want to make small changes. So in this case, the change that I've made that's actually been helping me out with a higher win rate is going from 5-minute time frame to 15 to 30 minutes. So rather than having the opening range within the first 5 minutes where there's a lot of fake outs, I changed that to 15 minutes or 30 minutes, right? Depending on if there's a lot of feds talking or if there's a lot of economic events happening that week. If there's a lot of economic events, then I usually wait until 10 a.m. for the opening range. If there's not that many events happening, then it's usually within the first 15 minutes time frame. Now, once you have written down all of those criteria or entry checklist, if you want to call it, once you have that written down, the next thing you guys want to do is find a backtesting platform. There's a website called marketinandout.com. I think it's marketinoutout.com. I'll post the exact link in the description. But you go into that website, right, and there's a ton of backtesting platforms. This is not like Thinkorswim where you're going to have to sit through each trade and see if it works or not. This is the actual method of backtesting that almost every trader that started, I think, pre-2018 used to backtest. Now, I think that idea is pretty much gone. Not that many people backtest their trading strategy. And that's why a lot of traders are, I believe, lost in the market. They don't know what their trading strategy is. But you go onto this website, right? It's marketinandout.com or marketinout.com. You open up the backtesting strategy part. And in that backtesting strategy, you input the answers to your opening reason for a trade, your stop loss. What is your stop loss, right? What is your exit strategy? You answer every single one of those questions. If there's a question you can't answer, then that means you haven't fully developed your strategy. And I feel like there's two parts which a lot of traders are missing. One is their trigger to enter. A trigger to enter is what causes you to enter a trade, right? For example, volume needs to be above a certain level. I'm looking for a bounce of the VWAP, and it needs to break above the opening. It needs to break above the opening print level or break below the opening print, right? This is just an example. That is my criteria to open a trade. Now, when you have these criterias, first thing is it's going to help you be more patient in the market. You're not going to be jumping into every trade, right? When you ask these questions, you're going to be looking at chart for all of those questions to be answered before you jump into the trade. Because a lot of traders, they don't know when to get in versus when not to get in. So when you put this information into that platform, what it's going to do is you can also choose random years. Like you can put this in 2010, 2015, 2012, right? Any year you want, right? The whole point of the strategy is it's supposed to work. It's supposed to work in almost every single market condition with small tweaks like your stop loss. So once you put this information into this website, what it's supposed to do is it's supposed to take a certain year, depending on what year you put. So let's say 2023. It'll take every single trade that met that certain criteria, and it'll spit out the information that, hey, this particular strategy makes 30%, makes 50% win rate, has a 30% win rate, it has a 50% win rate. Then it'll also tell you, based on the amount of capital that you invested with how much you're risking per trade, right? What is your end of the year going to look like if you follow this exact trading strategy? So in my opinion, I think a strategy can, before you even implement it into a paper trading account, the first thing you want to do is make sure you get that win rate to be higher than 70%. So every 100 trades you're taking, 70 trades have to be winning trades and 30 trades could be your losing trades, right? They don't have to be. But those 30% losing trades need to be less than your winning trades amount. Meaning if on an average, your 70 trades, your average win profit was, let's just say $100, your losses shouldn't exceed $30 on each trade, right? If it starts to exceed, like here and there is 1 or 2 trades is fine, or 10% of those 30% having a little bit above your losing or closer to your losing trades is fine. That means that either an event came out or there was a very aggressive reversal, which you were not anticipating, right? Something like that where you're still ending up executing on your stop loss even after the fact, that's still fine. Like that's part of trading. That's going to happen. But if your winning trades are $100 per each trade and then your losing trades are $50, then that 70% win rate doesn't mean anything. But that strategy now is telling you that you're probably overholding your trades, right? Now, when you're backtesting it, remember, the computer is going to get you in, get you out based on your criteria. Now, the next phase is for you to switch over from, take that data, put it into a paper trading account. I would say for 2 to 3 weeks, implement that exact trading strategy onto a paper account. Execute on those trading strategies. Now, phase 1, we figure out what our trading strategy is, right? We put it into a backtesting website. It spits out, gives us information, tells us, hey, this strategy works this well. Now, second phase is you have to test out how well your execution is. A lot of people's execution is horrible. Let's say on the backtesting website, it's giving you a 70 to 80% win rate. Now, when you go into the real paper account in real life simulation, now your return is not that great. What's the problem? It has to be your execution, right? Because you tested this out over 3,000 trades, 4,000 trades. By the way, that's with a click of a button. You don't have to go in on demand and take each one of these trades. If you have the criteria right, it'll take the trades for you and give you the information within, I believe, a minute or under. So if it's not working, that means that your execution is not on point. Then you have to figure out how to fix your execution. So once you figure out, all right, I'm a little bit slow when it comes to execute, I take too much time, I'm an overthinker, then that means now you need to work on turning that trading strategy into a system where you're not overthinking, should you get in, should you not get in? Your goal is to follow that checklist, and you have to execute based on that checklist. So let's say your second phase, you get that down, and from 70% win rate, because of your lack of slow execution, you get to 65, right? So your third phase is going to be to test your psychology, because now you take that trading strategy and you implement it with real capital. You don't want to start heavy. You don't want to go with 20,000. You want to start off with a small account, 3,000 to 5,000. And at that point, you know that the strategy on the paper works 70%. when you transferred it over into a paper account, your execution caused you to bring it down to 65%, which means you still need to work on your execution, but the strategy is still working. Now, the third phase is your psychology, which is the biggest factor and the hardest one to overcome. Now you know real money is involved. Now your emotions are going to start being more aggressive. And at that point, you need to figure out which one of your emotions are coming in the way of your execution. Now, a lot of people make it that trading is very, very easy, right? It is if you actually follow the steps, if you put in the time. Now, a lot of people don't backtest. A lot of people don't focus on trying to develop a trading strategy. They take a course, they follow someone on the Signals account, they follow someone on Discord with their signals, and they think, boom, I'm gonna be a millionaire. That's not how it's gonna work, right? Anything can go wrong in the market. If you're not well prepared, if you don't have the right information, if you don't have your own strategy, if you haven't backtested that strategy, none of it is gonna matter when you're sitting in front of the screen. All you're gonna do is you'll maybe make money here and there, but overall, you're going to be on the losing end. So give this a shot. This is 100% going to help you come up with your own trading strategy. If you guys have any questions, comments, suggestions on the next video, comment below. I'm also gonna put the website that I used to backtest in the description below. I also go over this with the members in my Discord as well, and the people who come in to take the classes. So any suggestions or anything you guys are still having issues with, comment in the section below, and I will come up with that video in the next coming weeks. See you guys soon.